Now, Granada Limited.
Madam,
This is
excuse me, kindly repeat that point. Foreign receipt, borrow foreign, invest local.
yes. When you're expecting a foreign receipt, you borrow foreign, you invest local. If you're expecting a foreign payment, that means you made a purchase. You borrow local, you invest foreign. So foreign receipt, borrow foreign, invest local. Foreign payment, borrow local, invest foreign. So this is November 2015, question 5C. Sorry?
Foreign payment, you borrow local, you invest foreign.
Yes.
Okay.
So let's analyze this question together. It is November 2015. Question 5C. We're being told that Granada Limited, a UK-based company. We need to move the side. Move the side. So Granada Limited, a UK-based company. So home is UK. Imports computer components from the Far East. So if it imports, that means it is buying. When it's buying, it's going to make a payment. So start analyzing from that point. It is a UK-based company, meaning home is UK. And because it is importing, it is making a purchase. And when you're making a purchase, you'll do a foreign payment, not foreign receipt. You cannot receive when you are paying. You're buying, you will pay. So most importantly, is step number one, point number one, UK is home country, and it is importing, meaning it's expecting a foreign payment. The trading currency is the Singapore dollar. And the value of the deal is 28 million Singapore dollars. 3 months credit is given. The current spot exchange rate is 2.8 Singapore dollars to 1 sterling pound. Because of recent volatility in the foreign exchange markets, Granada Limited's directors are worried that a rise in the value of the Singapore dollar could wipe out the profits on the deal. 3 alternative hedging methods had been suggested as follows: forward market hedge, money market hedge, and an option. So Granada Limited's treasurer has provided the following information. 3 months forward rate is the Singapore dollars of 2.79 per pound. Granada Limited can borrow Singapore dollars at 2% interest rate per annum and the sterling pound at 5% per annum. Deposit rates are 1% per annum in Singapore and 3% per annum in the UK. A 3 months American call option to buy Singapore dollars 28 million at an exercise price of 2.785 per pound could be purchased at a premium of 200,000 pounds on the London over-the-counter option market. So you're being told to indicate which would be a better hedging option between the forward market hedge and the money market hedge. So this one, sorry. Just trying to share the both. Good. There we go. Now, when we start with the forward market, between the forward market hedge and the money market hedge, if we start with forward market, for the forward market, we simply look for the equivalent pounds. Equivalent pounds. Our contract period is 3 months. It was 3 months. Imports computer, the trading currency, Singapore, and the value of that. The amount that you are going to pay is 28 Singapore dollars. The current 1 sterling pound because of the recent volatility. Three alternative, the 3 months forward rate. So the equivalent pounds after 3 months. We have the 3 months exchange rate in note number 1 at Singapore dollars of 2.79 per pound. So we are asking ourselves, if 1 pound equals to $2.79, how many pounds will be equivalent to the $28 million? The equivalent amount, equivalent pounds. So that would mean we are having $2.79 divided by $28 million. And we multiply by the 1 pound. The long cut is, if $2.79 equals to 1 pound. So how many pounds shall we get from the $28 million? Will be equals to how many pounds? That's the question you're asking ourselves. And that's what we do.
10.04.
10.04. Na hizo ni pounds.
Yeah, dollar, nini? Yeah, pounds.
10.04. Is it million? £10.04 million.
Yes.
Na forward contract inaisha tu hivyo.
Hiyo tu ndio forward contract.
Shika. Hiyo tu ndio forward contract. Kazi inapanga kwa money market. Forward contract, just look for the equivalent amount using the forward exchange rate.
But Mwalimu, we were told this 3 months credit is given. So this thing was for 3 months.
The contract period was 3 months.
Yeah.
So how, after 3 months, how much will you be able, how much pounds are you going to pay? I'm going to pay 10.04 million pounds. Because the contract period is 3
So we
months.
don't apportion 3 over. We don't apportion 3 over 12.
There is no rate for the 12 months of a forward market.
Okay.
Forward market, we have the exchange rate after 3 months. Exchange rate is never per annum. Exchange rate is a unit of cost. So let's see the money market hedge. money market hedge. So it is a foreign payment. Foreign payment, we borrow. We borrow local. Foreign payment, we borrow
Foreign
local.
payment, we borrow.
What is
We
the borrowing
invest
rate
foreign.
in local? So borrowing locals in Singapore, locals in UK. Note number 2, what is the borrowing
Yes,
rate in UK? I think 5%.
2% interest.
2% is in Singapore. Our home is in UK. 2% is in Singapore. Our home is in UK. So we borrow at 5%. You see that? So 5%, but the 5% is per annum. Indot na multiply by 3/12. So what is 5 times 3/12? Five times 3/12. 5 times 3/12.
0.0125.
Hiyo ni percent.
Hapana, hivi ni
As a decimal.
Percent is 1.25%.
So 1.25%. So we borrow local at 1.25 and invest foreign. We have the investment rate in foreign. Investing is on a deposit. I think 1% in Singapore.
2%.
Foreign is Singapore.
Yeah.
So 1%
Okay. 1%.
times 3/12. That is 0.0025.
0.0025.
So 0.25%.
0.25%.
Yeah, 0.25%. Great. So therefore, so present value. So we start the process. Present value of $28 million at an interest rate of 1.25%. So present value in discounting the PVIF is like 1 plus R raised to power negative N, or 1 plus R, 1 over 1 plus R raised to power N. Remember the formula? So that is 28 million. We can divide by 1.0125. Our period is 1, hakuna haja ya raise to power 1. So how much is the present value?
27.65.
27.65. So 27.65 million is only dollars. That's our step number 1. Foreign payment, borrow local. Then step number 2, we convert into the foreign currency using the spot rate. So equivalent.
Mwalimu, hold on kidogo. Okay, it's okay.
So the 3 steps. Step number 1, borrow, convert, invest. Borrow, convert, invest. Borrow, convert, invest. Foreign payment, borrow local. convert into the foreign currency, then invest. Yes. So that's why we've borrowed local. This is the amount we have in dollars. Convert into pounds. Do you have the spot exchange rate? The spot exchange rate somewhere. I think here the current spot exchange rate is 2.8 pounds, 2.8 Singapore dollars to 1 sterling pound, right? You see that?
These are not fixed rates, it's the spot rate.
There? Ndio amesema tu hapa
This
vizuri.
exercise.
The current spot exchange rate. Yes.
Okay.
Yes. So the 2.8 is the spot rate, the current spot exchange rate, 2.8 to 1 sterling pound, right? So can we get the equivalent pounds? So the dollars, 2.8 equals to 1 pound. Equals to 1 pound. So how many pounds do we get from the $27.65 million? So you're having 2.8, right?
9.878.
So it's $2.8 divided by what? Divided by 27.65.
No, it is 27.67 divided by 2.8. Malim.
Sawa.
It is 27.65 divided by 2.8.
So if $1 equals to that, sawa, nimeiona. So we're having 2.8 for one pound. Yeah, it's true. 1 pound divided by 2.8 times the 27.65. So 27.65 million divided by 2.8. How much is that?
9.88 or 9.875.
875 million. Na hizo ni pounds. Hizo ni pounds. Then the last step, invest these pounds local. Borrow local, invest foreign. So therefore the last step, amount after investing 9.875 pounds in Singapore. That is the foreign. Do you have the investment rate in foreign in Singapore? Kuinvest ni sawa na kudeposit.
I mean, we invest local.
We borrowed local, so invest foreign.
Okay, 1%.
We borrowed local, we invest foreign. What did we do? Now we're now going to invest at 1%, the foreign market of 1%. That ndio tulianalyze hapa. Meiona?
Yes.
So therefore, hapo ni kutafuta the future value. How much shall we have after the 3 months? We take 9.875. We increase it by 1 plus. So 1 point, that is 0.0025. 0.0025. I think that's okay. 0.0025. Yeah. How much do we have there?
No, around 9.90.
9.90. So you're going to have 9.90 pounds. So that is our answer. So between the forward contract and the money market, which one is the best? Which one is cheaper because you're expecting to pay? So 9.90.
Money market.
Yeah, money market. So being asked for the 6 marks indicate which would be the better hedge between the forward market hedge and the money market hedge. Then in our case, money market is a better hedge strategy because it is cheaper. We're expecting to make a payment. Navia too.
Excuse me.
Uh-huh.
Hello.
Yes.
Hello. Mwalimu unanipata?
Nakupata vizuri.
Network yangu is not steady. So which one is okay. I was lost.
So you're saying
But this 9.90 pounds after that, after 9.
Since it is a payment, we go for the cheaper one, for the cheaper option. Hence, so the money market, forward contract is 10.04, money market is 9.9, still. So hence money market hedge is the best. There you go. That's okay. Can we go to the next one?
Yes.
Hi. So evaluate the option hedge if the following spot rates were applicable in 3 months' time. Now options contract. So for the option, it gives a right, but not obligation. It gives a right, but not obligation to either buy. So buying is the call option, or sell. Sell is the put option. Given number of assets in future at a predetermined price, at a predetermined price. And that predetermined price is known as exercise price. I'm a strike price. So you agree today the amount at which you'll transact at a future date. So that price you're agreeing on is what we call the exercise or the strike price. Option to buy is the call option. Option to sell is the put option. What have you been told about the options here? Note number 4. A 3 months American call option. So you see, it's a call option because it was an option to buy. So to buy 28 million Singapore dollars at an exercise price of 2.785 per pound could be purchased at a premium of 200,000 on the London OTC. Evaluate the option hedge if the following spot rates were applicable in 3 months' time. So here, we just look at the equivalent. Ni kama forward market. Equivalent pounds after 3 months. So the first one is at sterling in Singapore dollars. Singapore dollars 2.78 per pound. So there you just look for the equivalent pounds. So you're having £1 for that. I had $2.78 for £1. Then what about the $28 million?
Well, my network is not steady. But I'll just follow.
Are you able to hear me?
Yeah.
So $7.8, $2.78 equals to £1. How much of the pound shall we get from the $28 million? So this one is supposed to be 28 million divided by 2.78, right? So $28 million divided by 2.78. How much is that? That we are now getting pounds. Pounds, how much?
$10.07.
10.07. Ni hiyo tu. Alafu kulikuwa na premium. At a premium of, there was something that we are told about the premium. At a premium of 200 pounds. Kumbuka hizi ni million. Now, in a money market, the premium reduces the price. So less the premium. The premium is over 200,000. That is 0.2 million. $0.2 million. So we less the premium of 0.2 million. So net cash flows. So premium discount increases the price, premium reduces the price. And the argument is very easy. The argument is that the premium and the discount are always charged by the bank. When the bank is charging a discount, that means the bank is losing. When the bank is offering a discount, the bank is losing, the investor is gaining. All these transactions are done at the bank. So the bank is charging a premium, then the bank is gaining, somebody must lose. That somebody who is losing is the investor. So the premium reduces the price, the discount increases the price. It makes us more rich. So therefore, there we have, is it 9.87?
Yeah.
9.87 million. So do the same for the 2.82. So the second one is about the equivalent again. So equivalent sasa hapa ni 2.82. So for the 2.82, we are having $28 million divided by $2.82. Which equals to times 1 pound, of course, which would be pounds ngapi?
9.93.
9.93.
Yeah.
So 9.93 million pounds. Then don't forget to less the premium. Which was 0.2 million. So you're left with the So the next cash flows becomes 9.73. So there we go. That is for the 6 marks. If you're unapata 6 marks.
Mwalimu.
Yes.
Hello.
Yes, Winnie.
Maybe you will share with me this video because my network keeps logging me out and in all the time. So.
No problem. So that is what was expected of us in that question. What is more important is understanding the steps, especially for money market. Money market ndio inakuanga na kazi mingi. If you're expecting a foreign payment, you borrow local, you invest foreign. If you're expecting a foreign receipt, borrow local, invest foreign. Sorry, borrow foreign, invest local. Sorry for that. Let's try get one more question. I can see this one here. This is just per limited. Which sitting is this now? Should be 2016 November or what? May 2016, question 5.
Mwalimu, question.
Yeah, yes.
Hello?
Yes.
Hii premium sioni.
When you unauliza? There's a premium that was charged of 200,000. Meiona? Have you seen it? When we are there? Premium ilikuwa hapa.
Mwalimu network yake, she's not there. She's she's bad.
Hata ame left.
Kwa nataka kuuliza hiyo story ya hiyo 200,000 ama na history ya 3 months ya
hapo kwa 200.
Hapa 3 over June.
Because unacheki the period always affects the interest rate because the hata ukiangalia hii swali is the interest rate zimewekwa per annum. But the exchange rates are the rates as at that time.
So wangesema per month ndio tungefanya ile 3 over 12.
Hata hakunanga exchange rates za per month.
Okay.
Exchange rate is what is affecting you as at that time. Ni kama ukienda kwa forex bureau exchange Kenya shillings na how much. You don't exchange per month. It's the value at that time.
Spot rate at that time.
Yes. What is per month? Per annum is always the interest rates.
Interest, yeah.
Okay. So let's do one last one, page 85. Yeah, May 20. Is it May 2016? April, I don't know. June 2016, question 5. So Jasper Limited. Jasper Limited is a company based in Nairobi, Kenya. So Nairobi is home, which does business with companies based in Tanzania. So home is Nairobi, home is Kenya, foreign is Tanzania. From such trade, Jasper expects the following cash flows in the next 6 months in the currencies specified. So he expects payments due in 3 months, Kenya shillings 116,000, meaning ilinunua. Receipts due in 6 months, Tanzania shillings 1970, in 3 months, sorry. Payments due in 6 months and the receipts due in 6 months. The exchange rates in the Nairobi market are as follows. So you have spot rate, 3 months forward rate and the 6 months forward rate. Interest rates ziko hapo chini. Interest rates, borrowing and lending. The net Kenya shilling receipts stroke payments that Jasper Limited, that's the required. The net Kenya shillings receipts or payments that Jasper Limited may expect for both its 3 months and 6 months transactions if the company hedges foreign exchange risk on the forward foreign exchange market and the money market. So forward market and the money market. Let's see. So this June 2016. Question 5B. So if we can start with the forward contract, forward exchange market, vile wameita. Kwanza, tukua wajanja. Tukianza na 3 months. Kwa hapa lazima tufanye tofauti. Tukianza na 3 months. So for the 3 months, already tuko na moja ambayo iko in Kenya shillings, hiyo haina shida. So we convert the 1970 Tanzania shillings into Kenya shillings. Do we have the the exchange rates on 3 months. So you have a payment. So hapa, foreign payment. In 3 months time tumeona ni Kenya shillings, hiyo isha convertiwa, so hatuna shida na hiyo. 116,000. Then look at the foreign receipt. Foreign receipt. Now, the role of the bank. Because you're expecting to receive, in case of a payment, the bank is going to sell to us so that we are able to make the payment. In case of a receipt, the bank, so for foreign receipt, the bank buys. While for foreign payment, bank sells. Why is the bank buying and selling? Because as I said, all transactions are done through the bank. All transactions are done through the bank. When you need to make a payment in the foreign market, the bank has to sell to you so that you can be able to transact. When you expect to make, to receive, the bank will have to buy because you receive through the bank. And because this one is a payment, because this one is a receipt, the bank will buy. And of course, bank buys at lower rate and sells at higher rate. Shika. So as you're doing all this, where we are targeting is this. Hapa examiner ametupea rates mbili. Kuna 17.106 na kuna 17.14. So which one should we use? Which one should we use? We are guided by that statement of ours. So the bank will always, yes. So the bank will always buy at a higher rate, and the higher rate of the 3 months higher rate. Are we seeing? Na hizi ni premiums. So let's look at the two rates. So we have 17.106. Alafu tuko na 17.14. In case of a premium, so these are the spot rates. So remember tulisema the discount increases the price, the premium reduces the price. So you have the 3 months. Hii ni ilikuwa premium, so we less the premium. Premium reduces the price. Premium ya kwanza, hizo ni cents. Make it a decimal. Remember 100 cents make 1 unit of currency. So this one will be 0.0082. Convert into Kenya shillings ama Tanzania shillings. Na ingine because the cents in shillings 0.0077. Just divide by 100. So that gives us the 3 months. 3 months forward rate. So 3 months forward rate equals to this minus this. So there we go. Na hizo ni Tanzania shillings per Kenya shillings. So these ones are Tanzania shillings. Let me insert something here. So this is the TZ shillings per 1 Kenya shilling. So there we go. So therefore, for that foreign receipt, we just ask ourselves, what is the expected, the equivalent Kenya shilling after 3 months at the 3 months exchange rate of, so hizi story tumepiga hapa juu za kusaidia, are you using 17.098 or you're using 17.132? The bank is going to buy because you're expecting to receive. The bank is buying, the buying rate is this one. The bank will always buy low, as we've said. For foreign receipt, the bank buys at a lower rate and sells at a higher rate. So we'll buy at this. So you shall use the 3 months forward rate of Tanzania shillings 17.098 per Kenya shilling. So let's get the equivalent. So we are having 1 Kenya shilling for 17. So you can just say 1 Kenya shilling is for Tanzania shillings 17.098 times how many Tanzania shillings that we had? 1970. So times 1970. So this is just like saying 1970 divided by 17.098. So it's 1 over 17.098 times 1970, which is the same as 1970 divided by that. What do we have?
115.22.
115?
0.22.
1970,000 divided by 17.098, right? Nasema ni Kenya shillings?
1970,000. Nimeweka tu 1970.
Sorry?
Nilikuwa nimeweka 1972.
Oh, so it's how much Kenya shillings?
Okay.
Sorry?
8.68.
8.68.
68.
It is 1970,000 divided by 17.098.
Nimefanya hapo. Just a minute.
115?
15218.
218. So 115218.
Do you put the set? It's not enough.
Do you put the?
0.15.
We can do 0.15 for no problem. It's okay. Then we less the payment. Payment was of how much in Kenya shillings? 116,000, right?
Yeah.
So Kenya shillings 115,000. So do we have net payment or net receipt?
No, I think it's 116,000.
116, sorry. This is 116, not 115. So tunabakisha negative ama positive?
Negative 781.85.
So ikiwa negative inamaanisha we are left with the net payment. Of shillings ngapi?
781.85.
781.
781.85.
781.85. So that's a negative, so it's a net payment. So here near 3 months. Then you go to 6 months. We go to 6 months. So for the 6 months, let's first of all get the 6 months forward rate. The 6 months forward rate. The spot rate. Spot rate. Let me just copy this. Nilete hapa. That is our spot rate. Then we less the premium. Pia ilikuwa premium, say discount. Premium reduces the price. So we less the premium. Our premium ya kwanza, it is cents 1.39 divided by 100, that is 0.0139. 0.0139 shillings. Na side ingine 0.0134. 0134. So you have the 6 months forward rate. So equals to this minus this. We are lessing because it's a premium. Hi. So Apple, both the payment and the receipt are in foreign currency. So we can do a trade. We can do a check off, a set off. We have the 6 months payment. 6 months payment, which is of Kenya shillings. Is it 44 Tanzania shillings 44.70? But 470,000. Then we have 6 months receipt. In 6 months, you expect a receipt of Tanzania shillings ngapi? I think 1540.
Yeah.
1540. So do we have net payment or net receipt? The receipt is 1.5, the payment is 44.70. So hata tukiless, tunabaki na amount ya kupay, si ndio? So net payment of Tanzania shillings ngapi? The difference? 29.30.
29.
29.30, thank you. Hi. So again, this is a payment. Now this is a payment. Ile ingine ilikuwa receipting in any payment sasa. So therefore you look for the equivalent Kenya shillings. After 6 months, 8. 6 months forward rate. 6 months forward rate of. Now here the bank is, we're expecting a foreign payment. The bank is going to sell. The bank will sell to us. So you are going to use the selling option here. The bank will always buy low and sell high. Hizo ndio vitu tunafaa tuangalie. So is the bank going to buy buy from us or sell to us? Because you expect to pay, it was a net payment. Because you expect to pay, the bank is going to sell. So it sells at 17.127. So Tanzania shillings, 17.127 per Kenya shilling. So that is, and you're saying this because we're expecting to make a payment. So therefore we are having 29.30. So Tanzania shillings 29.30 divided by Tanzania shillings 17.127. How much of the Kenya shillings are those?
And 171,074.91.
171,074.91. So hiyo ni hiyo tu. Hiyo haina anything else. Tushafanya the set off. That is for the forward contract. How is it?
It's okay, a bit confusing. Kama hiyo ya 3 months tulifanya exchange.
The 3 months?
The one for 3 months, is it the same process?
Yeah, it's the same process that we've taken. Tofauti tu ni kuwa, for the 3 months, because it was a payment, it was a net receipt. Because it was a receipt, we used the buying exchange rate for the bank. For the 6 months, it was a net payment. So because it was a payment, we used the selling exchange rate because of the role of the bank. For receipt, the bank buys. For payment, the bank sells. Everything else is the same. So can we go to money market?
Yeah.
So money market contract or hedge. Tuanze na ya 3 months. Tuanze na 3 months. So 3 months, your payment ya 116 hatuna shida nayo, it's already in Kenya shillings. But tuko na option ya hii tuko na kazi hapa kwa foreign receipt. So for the 3 months, you can just say foreign receipt. We borrow local or we borrow foreign? We borrow foreign And invest where?
Local.
And invest local. See this other side it was?
Mtu anajua aje una borrow kwanza local ama foreign.
Unajulia kwa nini kama ni payment ama ni receipt. Like ile swali ya kwanza tulikuwa tumebuy, kwa hivyo tuli expect payment, tukaborrow local. But if you're expecting to receive, like in our case here, when you are receiving, that means you sold. So in that case, you borrow foreign, you invest local. If it's a receipt that is expected, borrow foreign, invest local. If it's a payment that is expected, borrow local, invest foreign. So like in our case, you're expecting to make a payment, a receipt, sorry, we borrow foreign and invest local. So do we have the borrowing rate in foreign? Foreign in Tanzania, still?
Yeah.
So present value of Tanzania shillings, 1970, at a cost of how much? Borrowing in Tanzania is 9%.
Yes.
But 3/12. 9 times 3/12 is ngapi? Two point
2.25.
So 2.25%. So therefore, we are having 1970,000 divided by 1 plus 0.0225. One over that's the discounting factor. 1 over 1 plus R raised to power n. Our n is 1. So what do we have there?
One.
19.
1926. 650.37.
That is 1926. Sorry. Tanzania shillings, 1926. 650.37. Good. Then after that, we convert. So equivalent Kenya shillings at spot rate. Do you have the spot rate? The role of the bank does not change because it's a payment, because it's a receipt, the bank is going to sell. So our spot exchange rate becomes 17.14. So spot rate of Tanzania shillings, 17.14. So this would be equals to it's a foreign receipt. So the bank is buying. Foreign receipt bank is buying. So we are not using 17.14, we're using 17.106. The bank is buying. So therefore we are having 1926 So having 1926, we divide by So we divide by 17.106. That will be Kenya shillings ngapi?
112,630.1.
112,630.10.
0.
That's okay. Then the last step, we borrow foreign, we invest local. So amount after investing in Kenya, Kenya is local for 3 months. Do you have the investment rate in Kenya? Lending ni sawa na investing. Is it 9.5?
9.5%.
But remember the rate has to change, 3/12.
Yeah.
9.5 is always per annum. Investing for 3 months. That is 2.375. Right?
Yes.
So therefore the amount expected becomes 112,630. 112,630.1. We increase it by 1 plus that. So 1 plus 0.02, 02375. So 112,630.1 times 1.02375.
115,305.05.
115,305.075.
115,305.05.
Sorry, 305.05.
Yes.
So there we go. Then we had some payment of 116,000. So you can less the payment, 3 months payment. Kenya shillings payment, which is 116,000. So less the Kenya shillings, 116,000. So do you have net payment or net receipt? I can still have a net payment.
Payment.
The difference of Kenya shillings. $695. 694.
694.5.
So 694 point ngapi?
95.
0.95. That is for the 3 months. We look at the 6 months. 6 months. Tulikuwa tushapata the net. Tushapata the net payment here in our workings. Ile 6 months. The 4470 minus 1540, because both of them were in one single currency, Tanzania shillings. So here we have the net payment. And our net payment was Tanzania shillings. Is it 2930?
Yeah.
So Tanzania shillings 2930. So therefore, foreign payment, we borrow. Borrow foreign or borrow local?
Borrow local.
Borrow local and invest foreign. Right? So the present value of 2930, Tanzania shillings 2930. At an interest rate. Interest rates zetu ziko hapa juu, the 6 months. The 6 months. Now the role of the bank, because we're expecting to make a payment, the bank will have to sell to us. And when the bank is selling, it sells at a higher price. So our 6 months exchange rate is 17.127. So therefore, at Tanzania shillings, 17.217. Menda happy. 17.127. Hi, bado kidogo. Sorry for that. So the present value of 2930,000. Do you have the borrowing rate in local? Locals in Kenya. And our borrowing rate in Kenya, is it 12.5? So 12.5. So present value of that at 12.5. And remember, the time is very important, 6/12. So 12.5 times 6/12, we get how much? Is it 6.25?
Yeah.
So you have 6.25%. Then you look at the equivalent. Nilikuwa nimekimbia step number 2 before step number 1. So equivalent Kenya shillings at 6 months, sorry, at the spot rate. Current spot rate of Kenya shillings ngapi? 17 point. The bank is now selling 17.14. So 17.14. So therefore you're having 2930 2930,000 divided by 17.14. Equals to Kenya shillings ngapi?
179.45.16.
0.16.
Ama tunaweza round up to 0.20.
0.20. Sawa. Then finally, we look at the amount after investing. Amount after investing. Investing ni sawa na na lending ama depositing. Depositing ama pia inaitwa lending. In Tanzania for 6 months. We have the lending rates in Tanzania. Are you saying 6%? Sindio? So 6 times 6 over 12. Is that 3%? That is 3%. So therefore, we are having 29,30,000 times 1 plus 0.03. So 2930 times 1.03.
317,900.
It's not 2930. You're now at 179.45. Sorry.
Nafanya gani?
We've already converted. Now you have Kenya shillings 179.45. So now looking for the equivalent of the Kenya shillings now. 170. 179.45.2. Sasa hiyo tunapata Kenya shillings ngapi?
On 76. 074. Ndo kama lazima kama 073.55.
073.56. So there we go. That is our 6 marks and 6 marks.
Inataka practice mingi.
Inataka practice mingi.
Yeah, because of this exchange whatever.
Yeah, sure.
Na haikosangi inakwanga every sitting for address and hedging.
Yes, we expect it in almost every sitting. Kuna zingine hii haikuji, unapata imeleta maybe black skulls, valuation. So it can, but in most cases, it is one of the most notorious. It is one of the most notorious parts of the exam. The forward especially the forward contract and the money market.
Yeah. It is quite common.
Haki leo mimi nimeshindwa, nilikuwa pahali hakuna network. You will share for me that video, please. Share with me after class.
Yes, I will.
Umeenda discharge? Umeenda charge?
Nimeenda?
Uko charge?
Hapana, nilitoka kwa nyumba nikaenda kwa restaurant nyingine hapa. Kuna network ina fluctuate.
Hata mimi na need kurepeat. Kuna mahali nimekuwa confused kidogo.
Na hii topic ndio kenye sijui na inakujanga exams. Na imenishinda hata kujua.
Sasa kurudia maswali.
Sawa. So like
Foreign receipt, the bank buys.
yeah, foreign receipt, the bank buys, foreign payment, the bank sells. And when you're given the two exchange rates, like in this case, spot rate 17.106 to 17.14. To interpret vile nimesema hivyo sijui 17.1062. Hapana. It is buying, selling. The bank will buy 1 Kenya shilling at 17.06 Tanzania shillings, and it will sell 1 Kenya shilling at 17.14 Tanzania shillings at the spot rate. So this is buying and this is selling. The bank buys at 17.106 and sells at 17.14. It will always buy cheap and sell expensively. That's why they're in business. So the role of the bank, foreign payment, the bank sells. And that's when it's a foreign payment, kama ni spot rate tumetumia 17.14. Foreign receipt, the bank buys. So if it's a foreign receipt, kama ni spot rate na concentrate kwa the buying rate. And as long as it's a receipt, we shall concentrate on this first part of buying. Ndenye tumeitumia hata huku kwetu baada ya kuziinterpret. Sawa.
Sawa.
So because it was a payment, it was a net payment, so the bank had to sell. When it's selling, tume concentrate hapa. And that's why we've converted, we've the equivalent Tanzania shillings iko hapa. Tumetumia 17.127. Why? Because the bank is selling. Tukienda kwa the spot rate, the equivalent, ukiangalia hapa chini kidogo. So hii ilikuwa 3 months. So 3 months, I think the bank was 3 months, the bank was doing what? Copy kit ya bank. The 3 months the bank was it was a foreign receipt, so the bank was buying. And that's why kwa 3 months, kwa spot rate, tuli concentrate kwa ile option ya kubuy. 17.106, which is 17.106 here. So just to evaluate them, alafu muone, muzipitie pole pole, because this one you have to understand it.